the silver market's gone through a major structural change in the last 2.5 years, and we're in pretty much a consolidation phase.
Jeff, you have a silver yearbook that's coming out next week. So
Yeah.
let's start with that. Let's start with the synopsis of your new report and findings from your silver research that you can share with our audience today.
Okay, well, yeah, we have our silver yearbook. It's coming out May 10th, and we'll have an online briefing at 10 o'clock on May 10th. People can go to our website and probably go to Kitco's website and find a place to link and register to attend that briefing. They can buy the report online from CPM Group. It comes out as an ebook. And these reports have been produced like since 1971, 72. What we're finding is, what you looked at is the silver market's gone through a major structural change in the last 2.5 years, and we're in pretty much a consolidation phase. So if you go back to the first half of 2019, you had silver prices basically around $15, maybe a little bit below that. And the price rose to $20 on an annual average basis in 2020, and then $25 on an annual average basis in 2021. And that was fueled by a very sharp increase in investment demand for silver. And it coincided with a large increase in gold demand too, and it coincided with the COVID pandemic and the economic lockdown and the deep recession and a lot of economic uncertainties and a variety of other problems that cropped up and concerns on the part of investors. So investors have basically more than doubled their silver investment demand from 2019 to 2020. And then they increased it another 50% last year. It's off a little bit this year, but it's still pretty high compared to where it was in 2019. Okay. And so that's keeping the silver price above $21, $22. But it's not driving the price higher at this point.
I want to talk about industrial demand for silver and then the investment supply or investment demand for silver rather. Starting with your outlook on the global economy, you have predicted that a recession could hit the U.S. in not so long. Let's recap the timeline again for the audience and what this means for silver in particular. Silver is used for a number of industries. Which industry? Let's start with that. Which are the dominant industries that currently use silver today?
Well, the biggest use of silver is in silverware and jewelry, but that's actually like 4 different industries, because there's decorative jewelry, then there's jewelry that's bought in various parts of the world as a quasi investment. It has a very low markup to the silver bullion price. There's silverware, there's silver objects to art, and then there's also silver that is made into statues and silverware that also has a quasi investment use. So I have, for example, a Ganesh statue, which is exactly 10 ounces of silver. It's a beautiful statue. I probably wouldn't sell it, but I do know what its value is in terms of its meltdown value, because it's exactly 10 ounces of silver. That's the biggest use of silver in fabricated products, silverware and jewelry. The next largest use is electronics, where it's used all over the place in connectors and contacts and semiconductors. It's used in numerous different applications because of its high conductivity. It's used increasingly in solar panels, and that probably is now up there around the 3rd largest use. Going back to the electronics, it's used a lot. A lot of the electronics uses in auto. But it's used in brazing alloys, ethylene oxide catalysts for manufacturing ethylene oxide. It's used in mirrors and bearings and a host of other uses too. So that, the use is spread across manufactured goods.
Right. Okay, so coming back to the electronics in particular, which is one of the uses, one of the major industrial uses, is that subsector going to be adversely affected by your recession outlook by 2023? Is it, or 2024?
We've been saying that we expected a recession most likely in the period 2024, 2025.
Okay.
So that's important then, because that suggests that you probably have 18 months or longer now still before you go into a recession. So we're still looking for modest growth in silver use in electronics for the next 6 quarters, and that our expectation has been that a recession probably wouldn't start until 2024. Now, let me just say, in 2007, we thought that there would be a recession in 2009, and it actually started in late 2007, went through 2008 and into 2009. So it's difficult to project the exact timing and all. But our view, which I think the Fed sort of said is their view yesterday, by virtue of what they did with interest rates and what they said, our view is that there's still a lot of rope in the economy, and we probably won't see the U.S. go into a recession until 2024. But there are gigantic economic, financial, and political issues that could upset the apple cart sooner.
Okay. Now, 2024, assuming you're right, recession hits, what happens to the silver price then? Are we going to see a dichotomy in which investment demand for safe haven goes up, which could, partly push up silver, but also because it's an economic slowdown, we may potentially see less industrial use for the metal, hence bringing it down?
You'd see less industrial use for the metal in a recession, but that's a relatively less important factor in terms of the price. The price would probably rise sharply because of safe haven investor demand. If you look at the relationship between macroeconomic trends, recessions, and economic periods of economic growth, and silver prices tend to do well during moving into a recession and into the early portion of a recession, because it's really investment demand that drives the price. When I was talking about the price of silver from 2019 to 2021, I wasn't talking about fabrication demand. I was talking about investment demand, which doubled in 2020 and took the price up from $15 to $20, and then investment demand rose another 50% last year, and the price of silver rose another 25, 27% last year. So you're looking at investment demand, which really drives the price, and investment demand tends to rise when you have economic stress, like a recession or high inflation leading to higher interest rates, leading to a recession.